Okay, I've got another video for you today, and as you'll see in all my videos, I have these EMA lines on my charts, and I use the 10-day, which is the green line, the orange is the 50, and the red is the 200-day moving average. I set it up like traffic lights. That's just a visual for me so I can see what I'm doing here, but it is the 10, the 50, and the 200 that are the most important to me. So what I'm looking for when I'm trading is I want these EMAs to be stacked this way. I want green on top, orange in the middle, and red on the bottom for an uptrend. If I was looking for downtrends, I'd be the opposite. It would be red on top, orange still in the middle, and green on the bottom. So what we're looking for in this simple moving average strategy is for when price breaks through the 10-day EMA. Now I use EMAs, but on a 10-day level, a GMA or a SMA or MA, whatever you use, they're all going to be super close together, so it doesn't really matter on that. Now I know a lot of people trade these crossovers here, okay? I don't trade crossovers of these at all, okay? You can see that it kind of works at times, but that's not the strategy that I'm using. I am looking for when price crosses the 10-day EMA. So I use this along with other indicators as well as just the 10-day EMA. But I'm just going to be showing you right now the 10-day EMA and the basic strategy that I use. So we can look here, right here. This is GoPro back on November 27th. We have here price breaking through the 10-day EMA, and we have the stack the same, right? We have orange in the middle, red on the bottom, right? So we're well above the 200-day moving average, well above the 50, and we broke through the 10 and an uptrend begins, okay? And then we go through here as well. It's a little choppier here, but again, this is where your other indicators will come in handy and let you know if this was a good entry or not. But again, it broke through and it went up, okay? Add some down days here, and then there's another breakthrough here, and you add that. Okay, so you need, again here, exiting here on the E, right? You don't know what earnings are going to do, and earnings would have wiped your gains. But again here, you're looking at right about here, you've got your 50 below, so not the ideal place, but here again price broke above the 10-day EMA and went up. This one was a little bit riskier to get in on. I may or may not got into that, but again, it's up to you. Let's have a look at another option. This is Canaan, right? So we're looking again. So this one again is showing us, I'm looking at the nice run this one has had. So when would our little easy strategy have told us to get in? All right, depending on how far back you go, but if you were coming along here, right, you're looking here, so you can see this is right on the line. You're looking for something to break over it, right? And you would think, okay, this is here, but this is where, again, I can look at this and think, yeah, I see why this would have been the ideal place to get in. So you can't just rely on the one indicator, okay? So you go down here, and I'm looking at this right here, and I'm knowing that's a little bit better, but again, you need a confirmation. You need other indicators to say this is a beautiful time to get in right here. So I'd be looking to get in here and look at the ride you're going on. Like from here, let's get this. From here, all right, you're up 300% at one point, like, you know, even more. This thing just rode up, right? And if you were to use, you know, you could have exited here 170%, stayed in longer, like right, if you exit here, you're at 274%, right? To as high as 500, just under 600%, right? Just picking out this strategy, okay? Now let's have a look at another one. One last one before we go. And you can test this out. 10-day, 50-day, 200-day. And you want them stacked like that. What happened here? Why have I not got Apple up? I was doing it wrong. Okay, so again, look at the gains in Apple. When a stock price is going up, it's this way. It's the 10-day, 50-day, 200-day, right? So let's go back here, right? You've got breaks over, you come back down, and then you've got your break above, okay? You might want to check your other indicators to see if that was the ideal time to get in, but if it was, you went on a nice run here with Apple. And again, price went down here, price went up here. This would have been a beautiful down. Like, I can just look at the chart right now and tell you this was good. Time to get in. Maybe not with the earnings day, but a little bit risky. And ride that up, okay? Ride it up. So when did we see this again? See, we see a break above here, and you get gains. Nothing like the steepness of the other ones before. And here you have a break across. This is below, so when do you want to get in? No, you might want to avoid that gap up here. This would have been a good time to get in, right here. You've got your 10, 50, 200. Get in here. Nice clean break above. Ride it up, right? Ride it up. Same here. We're back at it again. Ride it up. Like, you're going to leave a profit on these. Oh, we have a break here. A break here looking good, but we're below the 50. Leave it alone. And Apple's right now below the 50. Okay, so guys, when you put all your indicators together and figuring out your strategy, put your EMAs up there, right? Make sure that it's not just a thing of breaking through the 10-day EMA, it's the fact that you've got to have them stacked. 10 on top, 50 in the middle, 200 at the bottom. Color them however you want. I just do them red, orange, and red, green, just because it's like traffic lights. It's a simple reminder for me to do that. So it's a quick and easy way. Again, you're going to want to combine this with other indicators to make sure that you're not dealing with choppiness. You know, you can see some choppiness here. You want to avoid that. Other momentum indicators, other strategies can help you with that. Put it all together and you're going to make yourself a lot of money.